I am Mrs.S.Rajeswari, Associate Professor of Economics, A.D.M College for Women, Nagapattinam. Today's topic is balance of payment. So the main topics to be covered under the balance of payment is introduction, definition, features, types of balance of trade, balance of payment, structure of balance of payment, causes of this adverse balance of payment, measures, difference, disequilibrium, causes of disequilibrium, and last one, importance. Let us discuss one by one. Introduction. See, introduction, balance of trade. First, you have to see the balance of trade. See, balance of trade is nothing but the trade refers to the difference between the value of goods exported and imported. So, the balance of trade is equal to exports of visible items minus imports of visible items. Okay. See, definition. See, the balance of trade of a country is the relation over a period between the value of exports and the value of imports. Okay, this is the definition for balance of trade. Next, what are the features of balance of trade? See, first one is the elements of balance of trade or exports and imports. See, the balance of trade shows what? The total value of goods exported and the total value of goods imported by a country. And it also considers only the value of visible items or visible goods exported and the visible goods imported. And it is a narrow concept, and a balance of trade can be favorable and unfavorable. Next, what are the types of balance of trade? See, there are three types of balance of trade. First one, favorable balance of trade, unfavorable balance of trade, and equilibrium balance of trade. See, first one, favorable balance of trade. When it is favorable balance of trade, say, if the value of goods exported by the country is higher than the value of goods imported, that is in symbolic, it is called the export is greater than imports, that it is equal to favorable balance of trade. Okay, clear. Next, unfavorable balance of trade. When it is unfavorable balance of trade. If the value of goods exported by the country is less than the value of goods imported. Okay, it is also called trade deficit. See, the unfavorable terms of trade when it is export is less than the imports. Okay, next slide. Equilibrium balance of trade. See, when it is equilibrium, if the value of goods exported is equal to the value of goods imported, in symbolic it is export is equal to imports. See, when it is the trade deficit, it occurs. See, income received by the country from exports and payments made for imports. That is, country's imports exceeds exports. Okay. Next, what are the causes of balance of trade deficit? See, there are many causes. First one, lack of competitiveness, economic growth, overhead exchange cost, recession in export markets, and higher inflation. Next, balance of payments. See, first we will discuss what is the definition for balance of payment. First, it is nothing but the balance of payment is a record, or it is a systematic record of all economic transactions between the residents of a country and the rest of the world during a specified period. Okay, next, what are the important features of balance of payment? First one, it is a systematic record, and second, fixed period of time, that is the given period of time. Next, comprehensiveness, double entry system, self-balanced, adjustment of difference, all items included, that is government and non-government items. Next, C, that is structure of balance of payment. In this structure, there are two accounts, current account and capital account. And what are the items included in the current account means? That is mercantile exports and imports and invisible items. Okay, current account. Capital account means what? It is nothing but the current, it consists of transaction in goods and services, income and current transfers. It includes items like both visible and invisible trades. Okay, that is the current account. Next, merchandise exports and imports. That means imports of goods to India and exports of goods from India. You know, the difference refers to imports of goods to India and export goods from India. That is called merchandise exports and imports. Next, what are the items included in the invisible items? See, like services, transfers and investment income. See, services includes what? That is comprised of banking, travel agencies and services like insurance, transportation, professional services, royalty, software, BPO, education. Okay, these are all the invisible items. And it also include investment income and transfers. Next, capital accounts. See, capital accounts comprises of inflow and outflow of money for investment and international grants and loans. Okay, capital account comprises of inflow and outflow of money for investment and international grants and loans. So, first one, that is foreign investment. It is nothing but an investment made by non-residents in starting a new company or investing securities of companies in foreign markets. That is called foreign investment. Next, what are the types of foreign investment? There are two types. First one, foreign direct investment and foreign portfolio investment. First, let us see what is the meaning of foreign direct investment or FDI. Say this, the foreign resident investing in the equity of a company in other country and taking active part in the management, that is called FDI or foreign direct investment. Next, foreign portfolio investment. There is nothing but investing in the securities of a company. That is a foreign portfolio investment. See, the portfolio investors do not take active part in the management of the company. Next one, loans. See, loans means borrowing from the global financial institution or other countries. It includes commercial borrowings, external assistance and short-term loans. Next, what is the meaning for external commercial borrowing? It is the borrowing from international financial institution at commercial terms and borrowings from bond markets and credit from export credit agencies. Next, external assistance. See, it includes grants and concessional finance provided by external financial institution like IMF and World Bank. Okay. Next, short-term debt. It is nothing but the debt which is repayable within 1 year. That is called short-term debt. Debt which is repayable within 1 year. Okay. Next, banking capital means what? See, that is nothing but assets and liabilities of commercial banks, non-resident deposit account. That is the banking capital. See, what are the items included in the other capital? Say include it is any capital transactions not included in the capital, other banking capital, that is the other capital. So it includes errors and omissions. All debits must be offset by the all credit and overall balances, and some of the balances in the current account, capital account and errors and omissions. Okay, next, what are the causes for adverse balance of payment? See, the main cause is high volume of imports. Okay, high volume of imports and import of raw materials, oil price hike, repayment of loans, import liberalization, high inflation. Next, how to correct the adverse balance of payment through the measures. There are two measures, that is monetary measures and non-monetary measures. See, first one, monetary measures. See, monetary measures, it includes what? Deflation, devaluation, exchange controls, adjustment through capital movements, external debt and encouragement to what? Remittances. Okay. See, non-monetary measures, it include promotion of exports, restriction of imports, reduction of imports, reduction in budget deficits, improving business climate, developing alternate energy sources, attracting tourist, and financing current account deficit, cutting expenditure, social measures. Okay, next, what are the difference between balance of payment and balance of trade? Say, the balance of payment is a broader term, whereas the balance of trade is a narrow concept. Under the balance of payment, it includes all transactions related to visible, invisible, and capital receipts. Whereas the balance of trade, it includes only visible items. Next, the balance of payment always balances itself. And the balance of trade is only, it can be favorable or unfavorable terms. Whereas in the balance of payment is current account plus capital account plus or minus balancing item. Whereas the balance of trade is equal to net earnings on export minus net payments. Okay, and another difference between the balance of payment and the balance of trade is, it is a statement, that is balance of payment is a statement. It shows economic transaction during a country in a particular period of time, that is given period or constant period of time. Whereas the balance of trade is countries' export and import of goods with the remaining world, that is the rest of the world. Okay. Next, deficit in the balance of payment cannot be made by balance of trade, whereas the balance of trade, deficit in balance of trade can be made by BOP, that is balance of payment. Another difference between balance of payment and balance of trade is, the balance of payment is a true and a complete indicator of economic performance of a country. In case of the balance of trade, it is only partial indicator of economics performance of a country. Okay. Next, what are the types of disequilibrium in the balance of payment? So the balance of payment of a country is in equilibrium when, if the demand for exchange is exactly equal to its supply. Okay, that is the equilibrium balance of payment. There is neither surplus nor deficits. See, the total receipt of the country are exports, that is, it included visible and invisible items. That is, the total receipt of the country or exports are equal to its total payments or imports, or otherwise the balance of payment is equal to receipt minus payment is equal to 0. That is, B means balanced balance of payment, or is the receipts or exports, P is the payments or imports. Next, disequilibrium when it occurs. Okay, see, when the receipt of a country or exports is not to its total payments or imports, the time in the disequilibrium will occurs. Okay, next, what are the types of disequilibrium? There are different types. First one, structural disequilibrium, secular disequilibrium, short-run disequilibrium, cyclical disequilibrium, fundamental disequilibrium. First one, structural disequilibrium. What is meant by structural disequilibrium? Okay, it occurs when structural changes in certain sectors of the economy, it influences exports and imports, changes in technology, taste, income, attitude towards foreign investment, crop failures, strikes, development of better substitutes. That is called structural disequilibrium. Next one, secular disequilibrium. Thus, due to secular economic trends, the developed countries have income levels leads to high demand. So, imports are higher than the exports. That is called a secular disequilibrium. Okay. Next, short-run disequilibrium. It is caused by short-term or temporary factors. Example, during drought, a country's import food grains would increases leads to trade deficit. Already you have seen the trade deficit. Okay. Next one, cyclical disequilibrium. What is meant by cyclical disequilibrium? See, it is caused by business cycle, terms of trade and growth of trade changes in different stages of the trade cycle, causing cyclical disequilibrium. So, when it occurs, during boom, its imports would grow faster than the exports. That is called a cyclical disequilibrium. Next one, fundamental or long-term disequilibrium. Okay, so when it is occurs, the long-term disequilibrium, what is the meaning of long-term disequilibrium? Refers to deep-rooted persistent deficit or surplus in the balance of payment. Okay, that is the fundamental or long-term disequilibrium. Next, the main causes for the disequilibrium. There are three causes: economic causes, political causes, and natural causes. Okay, economic causes, political causes, and natural causes. See, what are the economic causes? See, first, there are 10 causes: stages of economic development, population explosion, business cycle, foreign exchange rates, inflation, change in consumer taste and preferences, influence of foreign culture, inability to compete the foreign competition, that is foreign investment outflow, and resource scarcity. These are all the economic causes. Next, political causes. See, the political causes, it include political instability and international relations. See, natural causes, it also include natural calamities. Okay, that is tsunami, like that, natural causes. Next, importance of balance of payment. Say the main importance of balance of payment is indicator of economic situations, reflect economic changes, indicator of foreign trade, and aids of economic planning, information of foreign receipt and payments, and the extent of dependency. Okay, and also knowledge of foreign investment indicates nature and composition of foreign trade, aids to preparation of government, and helps to understand the exchange rate movement, aids to explain changes money supply. Okay, these are the structure, components, merits, demerits, types of disequilibrium, and what are the causes and measures to remove the disequilibrium in the balance of payment. Thank you. Thank you, guys.